What do you want to talk about?
I think that we should do a deeper dive into, how first-time home buyers can make the impossible possible.
Which is the impossible is getting a house in this day and age.
I think getting an accepted offer sometimes feels like the impossible.
How much money do you need to have? And I know that obviously depends on what you're going to purchase, but in the bank, going into it, what should you have kicking around?
I, at minimum, have the 5% down payment. Kind of my rule of thumb is that mortgage borrowers should really have about 8% of the purchase price between the down payment, closing costs, and, things come up, adjustments and stuff like that.
Yeah.
First-time home buyers in today's market should have somewhere, between $30,000 to $40,000 available. And obviously, there needs to be some decent household income. I would say, it kind of depends from borrower to borrower, how much they actually do need to qualify. Some of that has to do with their indebtedness. But typically, the average first-time home buyer these days has to have household income of somewhere around about $100,000.
Right. Wow. And some of
it's significant.
And some of this can be gifted.
Yeah, of course it can be gifted.
Yeah.
It can be saved. Some borrowers have access to programs through the insurers called Flex Down, which is a borrowed down payment. So there are certainly options.
Yeah.
But the easiest is obviously having, the savings in place, and maybe that's an RRSP, maybe that's a TFSA.
Yeah.
And one thing that really does enable a lot of borrowers to make it a little bit easier is the first-time home buyers incentive. It's not available for all first-time home buyers. There's a maximum constraint of household income of $120,000. And you can't exceed in our market more than 4 times the annual income between the mortgage amount and the incentive. But it's a conversation that we have with all first-time home buyers, because I think that for a lot of people, it will reduce their borrowing costs, but also their high-ratio insurance cost. So that's a great way to get in the door.
Is that who sponsors it? The insurance company?
Yeah, the Canadian Mortgage Housing Corporation is the one that does that. Yeah.
How does it work?
It's a shared equity program. And the borrowers have to put down the first 5% from their own resources.
Yes.
The down payment cannot exceed 19.99% total. So in theory, a borrower could put down up to 14.99%, and then the insurer will come with another 5%. With a new home, if it's a brand new property, they will actually come in behind with as much as 10% in shared equity.
Why?
I think there's more of an incentive for obviously new construction properties. Sometimes new construction is actually more expensive than resale homes. And I think it's probably less risk for the insurer and really the government at the end of the day. Typically, new homes do appreciate sometimes faster than resale properties.
So let me get this straight. So a new home buyer has 5% down they want to put. And you're telling me that CMHC will give them another 5%?
Correct. If it's a resale home.
Right.
If it's a new construction property, they'll give them another 10%.
And how do you qualify for that? Is there some type of or income barrier? Or?
Maximum $120,000 household income.
Yes.
Maximum. And the mortgage amount and the incentive amount cannot equal more than 4 times the annual household income.
Okay, so this sounds amazing. Why aren't more people?
People don't talk about it. I would go out on a limb, Todd, and say I'm probably one of the only mortgage brokers, and I'm also going to include lenders, people at the branch level, that talk about the program here in our market.
Yeah.
I think the program hasn't hit across the country, and I'll use hit with air quotes. I think part of the reason we haven't seen the uptick is people don't really know about it. I think that it's slightly unpopular due to some areas of the country not even having insured mortgages. There's not much high ratio insurance happening in Toronto or Vancouver because you can't get high ratio insurance currently with properties with a purchase price above $999,000.
They won't touch
so
it.
that's
Too much of a liability.
Too much of a liability.
Yeah.
And they're trying to cool the market with properties that are kind of over that price point. The other thing, sometimes people don't want to be in bed with the government. I think we all kind of are.
If they want to give you your money, their money, which is our money.
And it's interest-free.
Yeah. Wow.
The way that it works is you have 25 years to pay this basically shared equity back.
Oh, you have to pay it back.
You have to pay it back. So you have 25 years to pay it back, or if you ever sell the property, or if the property ever becomes a rental.
It gets paid.
It gets paid, and you pay back 5% of whatever the property value is or the sale price is at that time that you sell it.
No interest, though.
No interest. So, depending on what happens with the market, chances are the government's going to make a couple bucks. But kind of the rule of thumb that I have with most home buyers and first-time home buyers, the property needs to go up in value more than $100,000.
Oh, I see. They get 5% of
the future value.
The future value. I see. Well, that's good for them.
It's good for the homeowner in the sense that their interest carrying costs are going to take a smaller mortgage.
Yeah.
So that's certainly positive. The other real win is when we insure a mortgage with the Canadian Mortgage and Housing Corporation, Sagen, or Canada Guarantee, you pay your premium based on the percentage of the mortgage. So normally if you put down 5%, we're financing 95%. But if you take advantage of this program and it's a resale property, we're only financing 90% of the purchase price. So it's actually going to reduce that insurance premium. It actually reduces the percentage of the insurance as well. Right. So it actually is a pretty good deal for first-time home buyers, and we certainly have the conversation with everyone. But I think that's one of the big things that differentiates us maybe from other lenders. And, I'm not saying that we are the be-all and end-all in mortgage lending. There's lots of options out there. There is a bank branch on every corner in Halifax and really on every corner of even rural Nova Scotia.
Yeah.
Branches everywhere. And we have 2 offices. But the reason that I think that we have a deep entrenched relationship with our clients, Todd, is because we give them the advice and talk about programs like this. It's not just taking the order. We really believe that we're advocates for our clients, and we really think that we're unbiased to the lender. Our bias really, lands with the consumer, because I think that we're in the relationship business.
Yeah, absolutely.
And if a borrower feels like they got good advice and good feedback from us, that makes me feel good. And I think that it's also going to make sure that they're going to come back to us. And they're also going to refer people like their friends and their family.
Yeah.
And, for me, we love making dreams come true. And obviously, homeownership is a big part of this Canadian dream, quote unquote. And there's so many nuances. And I think for first-time home buyers, it is more challenging now than it probably ever has been. And I think it's going to continue being challenging. But if you can get some advice, first-time home buyers incentive is one small piece of it. But I think if you can get advice like this and really get a good, solid plan together, it will pay off.
Mm-hmm. What's the best way for people to get a hold of you?
I think the first way is for them to check us out online at teamclinton.ca/radio. Lots of great information online. We have over 500 blog posts on our website, which I'm very proud of.
Yes.
All done locally here in Nova Scotia.
Yes.
And if you surf onto our website, every blog post from the last several months have all been local photos across Nova Scotia. So we're proud that not only the content is from Nova Scotia, we're also using photos that are done here locally. We want to support people.
Yeah.
And I think just like owning a home, it takes supporting people. And I think when a consumer supports an unbiased mortgage professional in the area, they're supporting a small business.
Clinton, always a pleasure. Thanks so much. Appreciate you doing this. It's always great.
Thanks for having me, Todd.
You got it. That's Clinton Wilkins and myself, Todd Veinotte. It's Mortgage 101, your guide to home ownership. We'll be back next month.